Hello, everybody. Welcome to Thursday. The S&P 500 was down about 0.1% today. Not a bad day. It held above the 200-day moving average, so it closed 2 days above. A lot of people use that as one of their signals for things starting to change direction. There's no guarantees when you cross through the 200-day moving average that the whole thing's over. We saw that in 2000, where we had a period of time it went through the 200-day moving average and then finally ended up coming down quite a bit more before it found its bottom. So, you know, we'll see what happens here. We're looking at a lot of reports that came out today. Most of them were positive. One is the personal consumption expenditure index, PCE. This is the favored measure for inflation for the Federal Reserve. It comes out very late, so very last day of this month. It was for last month, but the core PCE was at 5%. And all of these numbers that came out from PCE were better than expected. And remember, when they talk about getting down to 2%, they're talking about core PCE. So I see a lot of articles talking about, hey, inflation's at 7% and needs to come down to 2. No, actually, the core PCE needs to come from 5 down to 2. So still a long ways to go. Direction is the right way. If you look at the overall pattern over the last year, I wouldn't say it's super strong, but it's definitely going the right direction now. So that helps. We saw the 2-year Treasury yield fall some more today. We saw the dollar fall some more today. Both of those are positive for the stock market right now in this environment. And we saw manufacturing come in at weaker than expected today. Again, normally that's bad, but in a high inflationary environment, that's an okay thing in this situation. We need things to slow down. And then the last thing that we saw today was the claims for first-time unemployment, which are actually lower than expected. Again, normally that's good, but in this inflation world, that's actually a bad thing a little bit. What happens here is that, of course, the labor market is tight, and it's one of the things that's holding things back the most. And Chairman Powell talked about that yesterday also. But I think that this particular day is a really big deal because we had such a big day yesterday. We didn't take it all back today. We didn't fall below the 200-day moving average. We made our moves back into the market. We have about 3/4 of our money back into our normal allocation. We bought the S&P 500 today mostly, and really, okay with what's going on here. I think we have a lot of things in place that could create a nice run throughout the end of the year. We'll see what happens next year in the first quarter as earnings start to come in this possible, inflationary and recessionary environment that we're dealing with. So, but at the moment, we're seeing the inflationary portion of it start to cool off. We can see it in the bond market. We can see that in the dollar strength and what have you too. So those are good things. It's not a bad time to be an investor here and see how this plays out. But anyway, look forward to seeing you tomorrow, and we'll talk about the summary as far as that goes. Talk to you then. Thank you.